Understanding Pest Analysis, a comprehensive guide. Pest analysis is an essential strategic management tool that organizations use to examine external factors affecting their operations. It encompasses four main categories: political, economic, social, and technological, all of which play a pivotal role in shaping a business's environment. The model has evolved into various formats, with PESTLE being one of the most recognized variations, adding legal and environmental factors to the mix. This article delves deeper into the elements of pest analysis, its applications, and how businesses can leverage it for competitive advantage. The origins of pest analysis. The roots of pest analysis can be traced back to 1967, introduced by Harvard professor Francis J. Aguilar in his publication, Scanning the Business Environment. Initially, the model was founded on the principles of ETPS, which stands for economic, technical, political, and social factors. Over time, this arrangement morphed into the familiar acronym PEST, which remains widely used today for its memorability and practical applicability. The importance of pest analysis. Pest analysis is a valuable tool for organizations, especially larger corporations, as they often face substantial shifts in the macro environment. Understanding these external factors enables businesses to navigate uncertainties better and make informed strategic decisions. By conducting a pest analysis, organizations can identify potential opportunities and threats, assess their market position, and align their strategies with broader societal trends. Components of pest analysis. 1. Political factors. Political factors encompass the impact of government actions and policy changes on the business environment. This includes legislation, changes in laws regarding taxes, labor laws, and environmental regulations. Government stability. Political stability in a region can affect business confidence and investment decisions. Trade policies, tariffs, trade agreements, and international relations can significantly impact a company's operations, especially for those engaged in global trade. 2. Economic factors. Economic factors scrutinize the economic environment affecting a business, including economic growth rates. Understanding the growth trajectory of a nation can inform investment and expansion decisions. Inflation and interest rates. These rates directly impact consumer spending and investment costs. Supply and demand. Insights into market needs can guide production and pricing strategies. 3. Social factors. Social factors pertain to the societal influences that affect consumer behavior and market demand, including demographics, age, gender, and income levels of the target market. Cultural trends. Changes in lifestyle, preferences, and values that can affect the consumption of products and services. Consumer attitudes. Understanding how societal attitudes towards issues like sustainability or corporate responsibility influence buying decisions. 4. Technological factors. Technological factors analyze the effects of technology on the industry and the organization. Innovation and R&D. The pace of innovation in technology can create new opportunities or disrupt existing markets. Digital transformation. Changes in how businesses operate and engage with consumers through technology, such as e-commerce and social media. Cybersecurity. The growing need for robust cybersecurity measures as digital dependencies increase. Applications of pest analysis. Organizations utilize pest analysis in diverse ways. Opportunity identification. By recognizing favorable external conditions, businesses can strategically align their products and services to meet market demands effectively. Challenge anticipation. Identifying potential threats enables companies to formulate contingency plans and mitigate risks early. Operational assessment. Pest analysis can assess an organization's internal structure, revealing strengths and weaknesses related to its political, economic, social, and technological environments. Moreover, when doubled with a SWOT analysis, organizations can find synergies between internal capabilities and external opportunities/threats, leading to more robust strategic insights. PEST versus PESTLE analysis. The distinction between PEST and PESTLE analysis lies in the additional components of legal and environmental factors in PESTLE. These additional factors provide a more comprehensive view of the external environment, particularly in today's business climate, where regulations and environmental sustainability are paramount. How to conduct a PEST analysis. 1. Gather data. Start by collecting relevant information regarding the political, economic, social, and technological environment your organization operates in. 2. Analyze each component. Evaluate how factors in each category affect your business. Use qualitative and quantitative data to support your analysis. 3. Documentation. Document findings in a structured manner for reference and strategizing. 4. Regular updates. Conduct PEST analysis regularly, especially after major changes in the market or internal restructuring, to ensure the information remains up to date. Frequency of PEST analysis. Regular intervals are recommended for conducting PEST analysis, particularly after significant market changes, readjusting when new laws are introduced, economic downturns occur, or technological advancements arise. Keeping this analysis current ensures your organization can navigate market shifts effectively. Conclusion. PEST analysis stands as a critical framework for businesses aiming to understand the broader market forces at play. By systematically evaluating political, economic, social, and technological factors, companies can enhance their strategic planning processes and adjust to external changes proactively. In a world where agility and foresight are vital for success, integrating PEST analysis into regular strategic assessments can empower organizations to thrive amidst uncertainties.